All right, let's talk about something we all use every single day, but maybe don't really understand, our bank account. We're going to pull back the curtain and uncover some of the hidden secrets that decide whether your money is actually growing or, just slowly vanishing. So let's get right into it.
So here's a question for you. Is your safe 6% fixed deposit actually making you any money? I mean, we're all taught that FDs are the safest bet, right? You see that 6% return and you think, great, my money's secure. But what if I told you that feeling of security is, well, kind of an illusion?
And here's the kicker. This is the hidden catch. When inflation, the cost of everything going up, is at 7%, your so-called 6% return, well, it isn't a return at all. You're actually losing 1% of your money's buying power every single year. It's like you're running on a treadmill, but it's slowly moving backwards. And believe me, inflation is just the first piece of this puzzle.
Okay, so here's what we're going to cover. We'll start with your money's silent enemy, then uncover the hidden TDS trap. After that, we'll decode your bank deposits, figure out how to choose the right banking ally, and then put it all together in a Smart Savers playbook. And of course, we'll finish with the key takeaways.
So, we've talked about inflation being a silent enemy, right? But it's not the only thing you need to be worried about. Oh no, there's another sneaky mechanism out there that takes a bite out of your interest earnings before a single rupee even hits your account.
And that brings us to the hidden TDS trap. Now this is a big one. It's a system that slices off a piece of our earnings before we even get a chance to touch it. And you know what? Millions of people in India get caught in this trap without even realizing how much it's really costing them.
So what on earth is TDS? Well, it stands for tax deducted at source. And honestly, it's pretty simple when you break it down. Think of your bank as a tax collector. Before they give you your interest money, they figure out how much tax you owe on it, take that chunk out, and send it straight to the government for you.
All right, you're going to want to remember this number. It's the magic number, 40,000 rupees. If the interest you earn from all your deposits at a single bank goes over 40,000 in one financial year, bam, TDS gets automatically triggered. Now, for senior citizens, there's a little more wiggle room. That limit is 50,000.
Okay, let's make this real with an example. Imagine you have a 10 lakh FD earning 6.5% interest. That works out to 65,000 rupees in a year, right? Well, since that's way over the 40K limit, the bank immediately deducts 10% as TDS. So that's 6,500 rupees gone, right off the top. The most important part here? Your awesome 6.5% return just got knocked down to an effective rate of just 5.85%, just like that.
All right, so now we know what we're up against, right? We understand the enemies, inflation and TDS. So let's look at our toolkit. To actually fight back and make our money work for us, we need to get under the hood of the products we use every day. Savings accounts, FDs, and RDs.
Let's start with the good old savings account. It's fantastic for one thing, liquidity. Paying your bills, keeping a rainy day fund handy. But as a place to actually save and grow your money, it's an absolute wealth destroyer. Seriously, you're getting maybe 3–4% interest while inflation is chipping away at its value. And then you've got all those little hidden costs, minimum balance fees, SMS charges, you name it. The bottom line is, this is not the place to park your serious long-term savings.
Okay, what about recurring deposits, or RDs? A lot of us use these for disciplined saving, and that's great. They give you fixed, totally predictable returns, and the risk is super low, perfect for saving up for a vacation next year or something like that. But, and this is a big but, when you're talking about long-term wealth creation, something market-linked like an SIP, even though it's got more risk, has the potential for much, much higher growth. It really is that classic choice you have to make, safety versus growth.
Okay, let's get into the strategy. It's one thing to know the rules of the game, but it's another thing to pick the right players for your team. Because let me tell you, when it comes to banks, they are not all created equal, not even close. And the data? Well, the data tells a really fascinating story. Just take a look at this data. The difference in returns is massive. Check out the 3-year FD rates. Your typical public sector and big private banks, they're kind of stuck around that 7% mark. But then, look over at the small finance banks. They're offering anywhere from 8 to 9%. That is a huge difference, and it's money just being left on the table.
And this chart really just makes it pop. It's crystal clear. By simply choosing a small finance bank instead of one of the big private ones, you could be earning almost 2% more on your money every single year. Now that might not sound like a lot, but on a decent-sized deposit, that adds up to a ton of extra cash, all for just making one smarter choice.
Okay, I know what you're thinking. Wait a minute, are these smaller banks actually safe? And that is an excellent, totally valid question. But here's the crucial thing you need to know. Every single scheduled bank in India,
whether it's a giant public bank or a smaller finance bank, is insured by the DICGC. Your money is protected up to 5 lakh rupees per person per bank. That covers your principal and your interest. It's a really powerful safety net.
All right, so theory is one thing, but action is where the magic happens. So let's take everything we've just learned and put it into a real-world playbook. We're going to meet the Sharma family and see exactly how they completely transformed their financial situation.
So let's take a look at the Sharma family setup back in 2020. And honestly, it's a pretty common story. They had a whopping 15 lakh rupees just sitting in a savings account earning a measly 3%. Can you believe it? Their FD was at 6%, and when you factor in TDS, their total annual interest came out to just over 1.5 lakh. Yeah, it was safe, but man, was it inefficient.
Okay, but now check out their optimized setup. This is the after picture. They took out just enough for an emergency fund and put it in a high-yield savings account. The rest of it? They strategically split it across a few higher-yield FDs, averaging around 8%. And their new net annual interest? Get this, a massive 2,25,000 rupees. What a difference.
And here it is, the punchline. That is an extra 72,500 rupees of income every single year. Think about that. They didn't take on any crazy risks. All they did was understand the system and move their money around a little more strategically. That's it. Just a smarter strategy.
Okay, so let's boil all of this down. What are the key things you need to remember and, more importantly, act on, like right now?
I want you to burn this matrix into your brain. It's your cheat sheet. On one end, you've got savings accounts. Instant access to your cash, but you're losing money to inflation. In the middle, you have short-term FDs, a decent balance. And on the other end, long-term FDs give you the best returns, but your money's locked away. The golden rule is simple. Always match the right product to your specific goal and your timeline.
So here's your action plan. 3 simple steps. First, always keep that 40,000 rupee TDS limit in the back of your mind. Second, start exploring. Check out the small finance and digital banks. You'll be amazed at the higher rates. And third, and this is crucial, stop thinking of your savings account as a place to save. It's a transactional tool, a place for emergencies and bills. That's its job. It's not a wealth-building tool.
So there you have it. We've pulled back the curtain and uncovered the hidden rules of the game. Now you have the knowledge. So the only question left, the one I want to leave you with, is this. You work hard for your money. Isn't it time your money started working just as hard for you?